Hey traders, checking in on the stock market today. Consolidation out there. We'll check in and see if it remains healthy on the futures charts. We had big money playing a game in the Canadian MJ sector both yesterday and today. I'll point out what they were doing and how we can potentially recognize it in the future. Reddit stocks had big days today, breaking out, putting pressure on shorts all over again. Let's look at the charts. So starting it off with SPY, we broke the high of yesterday, but just barely, pretty much a double top. And again, consolidated all day. Felt a lot like Friday as far as how the day went. Started strong, pulled back, no major red flags. And if we look at the S&P 500 on the futures chart, we can see the 4-hour as our guide. There's no major red flags at this point. So we're still in a 4-hour uptrend. First red flag in the short term is a loss of the 4-hour uptrend. So if-then statements, and again, I cannot stress enough the simplicity of if-then statements and logic when using or when analyzing markets. If the S&P 500 futures chart is in a 4-hour uptrend, then the bulls have full control. The question will be, overnight, do we see enough pullback for us to then be scouting a lower high? Or is that it? And does it remain a potential little bull flag? Looking at QQQ, same thing. And if we look at the NASDAQ, it's holding up on the 4-hour a little bit better. And what does that tell me without even looking at things? I know XLF was weaker today because SPY is weaker than the NASDAQ. So if SPY is weaker than QQQ, it means somebody else is dragging it down, and the most likely culprit is the financial sector. So the NASDAQ here is a 4-hour bull flag. It's just a question of whether it's confirmed or negated into tomorrow. EMA 12 support, keeping those bulls strong. When we lose a 4-hour uptrend, we zoom out and scout a daily higher low. And you can see QQQ, plenty of space for a daily higher low to form, anything above 316.30. IWM, bull break to change the daily trend into a close at the low of the day. A lot of that was the financial sector doing the same thing. XLF, bull break of daily resistance 2805, didn't get an all-time high, but we broke resistance, closed at the low of the day. Notable turnaround. One more factor, talking about QQQ, Amazon and Apple are the most important stocks in QQQ. Amazon does not have a daily uptrend confirmed. Apple confirmed a daily uptrend today by 32 cents and closed weak. So that tells me a number of things. Number one, there are other names that are running QQQ over the last 4 days. It's not its major holdings. Number two, if we see weakness in Amazon and Apple, we need to be cautious. If Apple and Amazon trade sideways, then QQQ can keep doing its thing while other names get some attention, and we see rotation into those names and not the major tech names, which is part of the growth narrative, watching for money to flow into growth names more than big tech names. But if Amazon and Apple start to show us weakness and red flags and bear volume, then we need to be paying attention. But sideways is okay. And right now they're both doing sideways. So that's something to watch for a gauge on QQQ as well. So IWM, anything above 214.05 is a daily high or low. Keep in mind, bigger picture, have to be cautious. Anything under 230.95 is a weekly lower high. And it's just a little bit of a rounded top. Not much going on in IWM the last 2 months. Just have to be cautious if we were to roll over. Financial sector, anything above 36.59 is a daily high or low. The daily high or lows are the most important factor for us because the bulls keep control as long as they hold. But today was an ideal day for the way my portfolio is structured as far as swing positions, with everything in the green aside from SPY being a little bit red, but my FAZ position well into the green as well. XLV. Daily consolidation underway with the inside bar bear break. It definitely stands out that we've closed at the low of the day 3 days in a row. Anything above 121.59 is a daily high or low. It is a rising wedge that we're keeping an eye on. There's no sign of any notable bear volume or anything like that. But if we lose the daily uptrend, we will break this rising wedge bearish, and that would be notable. So there's some paths for the bears in some of these names. They have to prove it with follow through and volume, but we're just keeping close attention to see if they do. Biotech sector, weak the last 3 days as well. Low, higher the bounce, higher low, higher high, higher low, lower high, lower, not a lower low yet. 123.83. If 123.83 breaks, we're right back in a daily downtrend, and it's a potential weekly bear flag. Growth names, while they've had nice bounces the last 2 weeks, can absolutely be weekly bear flags. Remain skeptical of your growth names. I have been in our ARKK from 98. I sold half early at 101, but I am skeptical. This is a weekly bear flag unless bulls make their way up to the upper 1 teens. So I will remain skeptical, even though I want it to go up and I have a bullish position. No bullish bias, aside from the initial setup, which worked out. But again, I'm not going to assume that monthly higher lows are being set in growth. I am watching for them, but I am remaining skeptical. I feel like a stern parent. I don't know how to explain that more in depth. That's just what I feel like. SMH. So standing out stronger than QQQ yet again. That's been the consistent theme. Not closing weak. Definitely extended after this big 5-day bull move. Higher low every day is on watch. When that pattern breaks, we'll scout a daily higher low with tons of space for it to form. Weekly equilibrium on SMH. Anything under 257.54 is a weekly lower high and continued tightening range. We would have to lose daily higher lows for a convincing weekly lower high to be set. Solar, daily consolidation, trying to be a bull flag. No red flags. Healthy consolidation at this point. Bulls want to set a daily higher low as soon as possible to favor continuation of this bounce. Need an hourly trend change back to the bulls, and anything above 70.12, which is 10% to the downside, is a daily higher low. MSOS, daily equilibrium continues to tighten. So low, high, higher low, lower high. And if we pull back from here, we'll scout a daily higher low. And could be until next week before we get a break. 3 more days, still possible this week. And again, I'm going to talk about Canadian MJ here at the end of this video and how the last 2 days played out because it's fascinating. The VIX, daily downtrend confirmed. Trying to get a bounce going, but we'll just be looking for a daily lower high compared to $26. What would stand out to us? All major sectors at the low of the day at the same time. If that's not happening, money's going somewhere in the market, and it's keeping rotation alive and healthy. So we're keeping an eye out for that constantly, every day, every single day. I'm watching. Are we seeing all major sectors drop to the low of the day at the same time? If the answer is no, there is no broader market fear. The dollar is in a 4-hour falling wedge pattern, but no sign of a bull break. Keeping an eye on it, but bull's not proving anything. You can draw it even tighter at this point. We'll watch that one. 90.16 matters more to me than 89.50, 89.85, I should say. So the metals had a delayed bull break. In the video yesterday, I talked about how I would have liked to have seen the metals break bull with the dollar breaking bear, but they broke bull today. Gold closing up at the high around 1900. So I talked yesterday about potentially exiting metals, half of my metals positions in my swing IRA, and today is keeping me in these trades longer. So still holding on, and we'll see if gold can clear 1900 after 1900 is 1917, but really 1959 is the next clear level from there. Silver, daily inside bar bull break. So daily higher low is set at 27.20. And now the bulls trying to make their way back up to the recent high. Still holding the daily EMA 12. Last bunch of periods of consolidation. Keep holding that level, which is a good sign. Want to see the miners break bull. They aren't breaking bull. They're keeping the daily bull flag alive. Need a break of 40.13 to follow through. You could say that because the S&P 500 consolidated, that added a little bit of downward pressure on the miners, but I need that break to be confident in the metals. We've seen the miners lead the metals with clues plenty of times, and I do not want to see a failed daily bull flag and a break of 38.60 support. Oil, 4-hour higher low is set at 65.41. We did get a bull break, but no follow through. Still keeping an eye on this broadening wedge resistance, which is in play. Very significant recovery, but anything under 67.02 is a daily lower high. There were a lot of broadening wedges out there today. Crypto had them. QQQ had it on the 2-minute time frame. This is a pattern that I'm getting more familiar with, and I am intentionally focusing on increasing my knowledge about it. I did the same thing with wedges. I was not comfortable with wedges maybe 2-3 years ago. Charkal Dinsey had used wedges a lot. I started to get more familiar with them, and now rising and falling wedges are big money makers in my trading strategy. So I'm looking for, at the very least, for these broadening wedges, recognizing them to prevent me from being faked out. Because broadening wedges are a break of support, a break of resistance, a break of support. It's just choppy action. And I recognize this 2-minute rising wedge right here this morning. There was a playoff support, and then we knew not to get overly bullish on a break of double top resistance because it was rejecting right off of the uptrending resistance line. So I know that for the next 6 to 12 months, I will be constantly focusing on broadening wedges. And again, this game is a marathon, not a sprint. I may not make $1 off of broadening wedge recognition over the next 6 months. But I know that in 2 to 7 to 14 years from now, it is going to pay off. There's always something to be learning in the world of trading, no matter how long you have been doing so. So oil's broadening wedge still on watch. Natural gas, daily bounce underway. Just scouting a daily lower high when the 4-hour higher lows have been lost. Anything under 312.2 is a daily lower high. So a weak bounce at this point. And again, what I'm watching for in the short term, is it a big enough bounce for an equilibrium? Or is it a small enough bounce for a potential bear flag? Okay. So, CGC and TLRY is who we're going to talk about. There's other names in the sector doing similar things, but these are the two major names, dollar volume, etc. So TLRY yesterday, I got faked out, and it wasn't faked out. I made a bad trade. And I talked about that in the video yesterday. Double top inside bar rejection at 1544. But what stood out from that rejection yesterday? Normally, rejection from resistance, not surprising. But to reject from resistance and then drop straight, and this is a waterfall drop. And the broader market at this point in time, these are all clues that matter. A 5% drop from the high of the day. Normally, I would expect a rejection and then a 5-minute higher low. And the size of the retracement would dictate what we expect from there, but a higher low holding the low of the day. I did get faked out in the sense that I would have expected that 5-minute higher low because the broader market, everybody was green. And then Canadian MJ just started standing out as very red. Canada was closed on Monday. And that's a factor because these names are dual listed and there is significant volume on the Canadian exchange. And if you are maneuvering when one half of the equation is closed, traders have their hands tied. So bulls and bears in Canada couldn't do anything, which in my opinion allows for a little bit more freedom of US big money to push things around how they want. So in my opinion, and I'm very certain of, very convinced, but it is an opinion. In my opinion, the rejection of resistance and then flush was intentional to stop out longs and load up longs. Who loaded up longs? Big money. Who specifically? I don't know, but somebody with ties to whoever upgraded CGC this morning. I don't even know who it was. That doesn't matter. But to have daily charts that are set up for the bulls. And we know they were set up for the bulls because when's the last time I've talked about a Canadian MJ chart in the broader market video? The answer is many, many months ago at the soonest. But I talked about it yesterday because the setup was there for the bulls. I thought it would be a news release that would be the catalyst to trigger the volume and volatility. Excuse me. So it wasn't a news release. We get in my opinion, the intentional flush of stops yesterday, and breaking to the lowest price seen in 5 days definitely knocks some people out and allows bulls to buy those liquidations or stop outs. Then you get CGC pre-market upgrade. Now, if you've been following the Canadian MJ sector for the last however many months or years, you know that in a bear downtrend, upgrades don't mean anything. They don't mean anything. The market doesn't react to them. The market doesn't care. We're in a downtrend. But they cared on this one. Why? What did it do? It led to a gap up open. And on that gap up open, instantly, anybody that is short in the last 7 days is now underwater. When I was live streaming pre-market, the most important factor I said is watch the first 5 to 15 minutes of trading. If this is the normal scenario, you gap up open, coming from a prolonged downtrend, you gap up open and you see profit taking. The 5-minute volume and candle, first thing, told us the exact opposite story. Bulls intentionally market bought and kept pressure on shorts right from the opening bell. Trap them pre-market with a BS price upgrade that nobody cares about, but it's enough of a little push to get all these chain reactions going. Surge on the bull volume right when the bell rings. Keep squeezing those shorts. Next thing you know, we're up 7 to 10% on an upgrade that in a daily downtrend normally doesn't matter at all. From there, CGC, let's see, at that point in the morning, again, still live streaming, CGC was up 5% and TLRY was up 1.5%. I was saying, watch TLRY to be a laggard, and it almost looked like there was profit taking in CGC, and they went right into TLRY. And it went from 5% to 1.5% to 4% and 3% to 5% and 5%. And next thing you know, TLRY is slightly up percentage-wise more than CGC on the morning. It was a great laggard play. That being said, then there was a massive shift. CGC did a normal hourly pullback, massive bull volume breakout, no red flags on consolidation, hourly high or low, and closed the end of the day fairly in the middle, in the upper end of its range. There is an upper wick on the daily time frame, but the hourly chart, no red flags. Size of the pullback compared to where we came from the low of yesterday, again, no red flags whatsoever. If we're looking at retracement size, we're looking at the low of yesterday to the high of today. We didn't even touch 382. You can call that a bull flag. It was all one straight move. And again, they utilized extended hours to trap shorts. TLRY, who is who I was trading, look at that big upper wick. We confirmed the daily trend change. The bull volume is there. There were red flags on TLRY. The red flags came. Look at that bull move on the day. Beautiful follow through. Everything looks great. Red flag number 1, straight drop to lose the 5-minute uptrend. I was looking for a potential head and shoulders here, but we didn't even set the 5-minute high or low. No major red flag. For me, that just means zoom out, scout a 15-minute high or low. From there, we struggled at that 15-minute EMA. And what started to stand out, the first thing that stood out, one of the biggest bids I've ever seen on TLRY, $4.2 million on the bid, was sold into in one order. The 15-second chart shows a massive volume candle selling into that bid. Now, I don't know. At this point, it's a lot more speculation. You know, I'm confident everything that I just said is how it played out. I'm a lot less confident about what went on with TLRY. On that giant bid, was that bulls trying to support the price and keep pressure on shorts, but shorts came up and had a big sell position and knocked that out? I don't know. But what I know is from that point forward, we saw consistent selling pressure on the ask. What does that look like? That means anytime you bounce, when the bid is 1575 and the ask is 1576, and someone buys the ask, and now the bid is 1576 and the ask is 1577, you're just upticking by a penny. During this consolidation and during this period right here, every single time we would take a step forward, new shares would be put on the ask, and it would look like bid at 1575, ask at 1576, buy the ask at 1576. That now becomes the bid. Instantly, it then becomes the ask again because someone threw up a bunch of shares, not like that, threw up a bunch of shares right back on the ask. And that just happened time and time again. And that's someone unloading shares or building a massive short. If someone wants to spook the market and manipulate things in one direction or the other, they're going to put up a big wall. You know, someone trying to sell 100,000 shares isn't going to put 100,000 shares in one order. They're going to put it 5,000, 5,000, 5,000, because they don't want to scare the bulls from buying their asks. It gets bought, throw another one right back up. 5,000 share asks aren't scary at all. 100,000 share ask is going to cause other traders to react around it. Oh, there's a big 100,000 share ask. I'm going to sell my shares right under it. Or I'm going to sell my shares market order because I don't think we're going to break that ask anytime soon. I don't think we have enough buying pressure. So someone was either building a large short position or unloading a large bull position. So who could it be? Could it be the people that flushed the price yesterday, triggered stops and loaded up, and they're just taking a one-day gain? And they're taking their 8 to 10% in one day and calling it a day? That's entirely possible. I would have thought that this would be a multiple day move. The way it was set up with big money, the flush out, the upgrade, and the gap and trap, I would have expected this to be a multiple day move. And it is still possible to be a multiple day move looking at CGC's positioning. It's a lot less likely to be a multiple day move on TLRY because the next bounce on TLRY, we're just looking for an hourly lower high. CGC can see hourly continuation. And if we're doing a comparison of the retracement sizes, 37% retracement versus 62% retracement. Very big difference. So that tells us this was specific to TLRY, the selling pressure that was going on consistently. And the only reason I recognize this is because I was trading for the 15-minute high or low. And man, it took a lot of work to make a small win here, just constantly flipping. And it was just playing off of, this was a little bounce and I sold into 2-minute EMA resistance. Then I bought a little more on the double bottom and then I sold a lower high. And then I still had a position and I saw a 2-minute falling wedge set up. And then the inability to break 1594, I sold a little bit more. I must have made 8 to 12 trades just to walk away with a half a day to a day maker, which is okay, better than a loss, but certainly not what I was looking for. I was looking for a 15-minute high or low, and then a bull move back to 16 teens. And we could see the red flags, which is why I became a lot more aggressive with my scaling out. Okay, little 10-cent move, I'm taking some off because we're getting the red flags. I am seeing the sell pressure on the bid and the ask. Or I should say on the ask, but relative to how the bid and the ask was moving around. I'm very curious to see if this move keeps going on CGC and other names tomorrow. But the moral of the story is this was 100% intentional from big money yesterday into today. And they used the upgrade. Upgrades and downgrades from banks are the biggest joke in markets. They are complete manipulation tools. They need to be outlawed. They are no better. They're no worse than Elon Musk going on Twitter and saying whatever about Tesla. It is the same thing. It's just from a bank and an institution, so it's supposed to be more valid. Just because that's the way the game is played and that's the way it's always been played for the last couple decades. BS. They mean nothing. They are used by big money to position themselves against retail traders and take retail traders' money. That's my rant. Do good things. See you tomorrow.
All the lilies are very quickly coming up. These are zinnia seeds that I planted, a bunch of different kinds all coming up. They're gonna line the driveway, but a truck already ran over this strip, so we'll see. Snapdragons taking root next to this fig tree and rose bushes. I transplanted them and we're starting to get our first nights that are in the upper 50s, low 60s, so roots are about to be real happy on a lot of plants. Letting all the clovers grow. One downside is the inevitable stepping on bees, which I already did once this year. Foxgloves. Fig tree is one of the last trees to put foliage on in the spring, but it's starting.